Okay guys, are you ready to put all the pieces of the puzzle together? We're in part 7 where we're going to summarize the step-by-step process that you would be able to use in order to find your next profitable trading idea. So here it is guys. Examine the chart 3 days before earnings. Okay, remember we've talked focus on the context. Okay, so 3 days before the earnings, it'll give you a really good indication of how the stock has been acting going into the earnings report. Then we're talking about from the standpoint of context, you want to go back 3 months on the chart and 6 months on the chart and to see what specifically reaction the stock actually showed you on the chart last time or last couple of quarters where it reported earnings. Then you want to make some observations about the stock and what it does 3 days after the earnings. So let's use Netflix as an example. Netflix typically will sell off into the earnings 2 or 3 days prior. So how would you be using such information? You would actually be targeting the next technology stock in line to potentially do the same thing. In other words, going into the earnings report, whether it's Google or Amazon, you could see the same behavior where Amazon could be selling off 2 or 3 days in a row, then on earnings it could jump higher, okay? So whatever the first stock in the group that you're making observations, make very good observations what it does going into the earnings, what it does after reporting earnings 3 days after. And before you analyze, after you analyze the short-term context, it's also clearly a good idea to examine 3 months before and 6 months. And not just the reaction, in other words, not just whether the stock went significantly lower, significantly higher, whether it gapped up, or whether there's no reaction at all, but very importantly to understand in calculating what strike price you want to buy. You may want to take a look specifically what it did 3 months and 6 months and 9 months ago during the Rust earnings report to understand what is the average magnitude of the move in the stock that you're considering placing in the trade. So let's say if the previous 3 months, last 3 months ago, the stock gapped lower by $4.50, okay? And it's currently trading at 120. Well, how would you use this information? Okay, well, you probably don't want to be buying 110 puts because chances are, it could repeat the magnitude of the move from last earnings time. And so then you may want to consider buying something closer to the money. Now, if you're looking at the stock in the last 3 quarters, it made moves to the magnitude of $24 each time. Let's say one time it went down 25, another time it went up 21, and the third time it went down 23. So on that stock, if it trades at 120, it's probably safe to buy 110 puts if everything else you've analyzed point that this time it's going to be a move lower after the earnings. So analyzing not just the reaction by analyzing the context, longer term context 3, 6, 9 months ago, but also paying very close attention to the magnitude of the move that the stock has made last time is going to be incredibly valuable in helping you guys select the appropriate strike price. Okay, now second thing is you want to look for the chart and search for any possible divergences. As you know, there's 6 cases of divergences, guys. Most of you should have taken the charts divergences course by now. And if you haven't, then definitely there should be some links below this video where you can actually take advantage and go through the charts and divergences and fully understand them. So the next thing to do is to identify any existing or developing chart patterns. We've just looked at an example of Google with the cup with a handle. We've just looked at another recent example of the multi-top formation. Guys, pay very close attention because these chart patterns, they will really be a great indication of where and how the next move could be coming in. So in some instances, there may not be any distinct patterns at the current moment. But you may notice that after the reaction takes place, after the earnings report, then now you may have the completion of a certain pattern. So oftentimes it would happen when the stock is stopping, you've got one shoulder, the head, and now after this drop you have potentially another shoulder developed. So generally that would point to a further move lower in the stock. From the 13 markets move formula. We spent a lot of time talking about the VIX environment. So if you have not taken the 13 markets move course, go back and review that, because this is really going to help you guys out identifying in what type of environment you will have certain behavioral patterns that would be more prevalent in certain market conditions. So generally in the lower VIX environment, you will notice that the predominant trend often to go along with such environment would be buying the dip. In the higher VIX and uptrending VIX environments, you will have stocks that could be popping after the earnings that will immediately sell off. So 13 markets move formula could be also applied by observing specific numerical moves in particular stock. Okay, so if you really want to complete the entire repertoire here, you can really focus on nailing the few moves in the stock specifically to understand what move could actually take place when the stock does report earnings. Okay, number 5, identify the predominant move in the market in general. Predominantly, are institutions buying the dip, or are they selling the bounces? Remember when you had the homework, guys, and you had to select 20 stocks and study what is the predominant pattern out of the first 20 stocks, let's say in the week 1 of earnings report? Okay, so make a very clear observation in how many instances institutions buying the dip and in how many instances they're selling the bounce. Number 6, examine historic DTR. You guys know what DTR is. By now you should know what it is. It's daily trading range. So on general days, what is the daily trading range of the stock? Is it moving up plus minus a couple of bucks? Is it moving plus minus 10? Is it moving plus minus 20? How much does the stock will move, both percentage-wise and net difference-wise on regular day? Then go back, as we mentioned, by analyzing the context of the chart 3 months, 6 months, 9 months before, and analyze the general daily trading range on the days when the stock is reporting earnings. So you have some historical idea by how much the stock typically will be able to move. So make observations on general days, make observations on right after the earnings announcement days. How much is the daily trading range of such stock that you're considering trading? Now, very important question, right? Especially if you're a swing trader. That's why I got it here, guys, in red. It's incredibly important, right? You don't even want to trade the stock. Remember the Starbucks example we were analyzing earlier, where it moves up one day, goes down one day, moves up one day, goes down one day? Guys, it is not a good product for trading options, because most of the time it's just trending sideways. What you want to identify before you place that earnings trade is historically, does the stock have a high probability of moving lower or higher in the same direction for at least 2 or 3 or maybe even more days in a row? If you will go and look historically, if let's say last time a stock reported earnings and it moved consecutively higher 3 days in a row, go for it. If the stock moved consecutively lower 5 days in a row, that's a great product for trading directional options, and it's going to be a really good product for trading, for implementing swing trading strategies. So make sure you guys really focus on that. Don't trade any stocks that do not have a history of moving in the same direction for multiple days in a row. The next thing, examine option volume. So on the day of the earnings announcement, when the market actually opens and the fresh volume of these options contracts is starting to come in, pay attention to any big orders. Pay attention to what was the open interest before in relation to the volume today. Pay attention as far as what is the relationship between the number of put contracts and call contracts that is coming in. I'm talking about fresh volume. That could really tip your trade into either direction, but if you've done all your homework and you've so far have done all the steps, this could just give you just an extra level of confidence to which and when to take the trade. Step number 7, pull up the most heavily sold and bought list for the day on Investors. So in other words, go to investors.com, pull up. Maybe you will see that, hey, by 10 a.m., some of the stocks you're considering trading today, your top 3 ideas, maybe you will notice that that stock is right there on investors.com. You're going to be able to clearly see whether institutions are buying it or distributing the stock on heavy volume. And that could give you another piece of confirmation and the peace of mind to go ahead and place your trade. Number 8, keep an eye on any fresh sizable options trades that are announced on Benzinga that day. So you would be able to react quickly to a possible reversal in the stock. So always run Benzinga on the background. They make these big trades announcements. They, keep reporting all the news that are coming throughout the day. You don't want to be sitting in the trade, especially with a large position. All of a sudden, some announcement comes in that jeopardizes your whole strategy, and you're not able to get quickly out of, or even more importantly, reverse the directional trade to where it's going to make you a ton of money. And some of the examples we've looked at, the initial reaction of the stock could be such, okay, it had a great earnings quarter, it had great everything, and then the earnings call actually begins where investors are getting an opportunity to ask the company some questions. And all of a sudden, during the earnings call, you see the stock was just up and it's reversed and now it's selling off in heavy volume. Well, there's probably was a question that was asked in the earnings call, probably about margin pressures or probably about future guidance and so on, that we did not have the answer to at the time of the earnings report announcement. So some of these reversals, guys, they could be vicious, and you certainly don't want to miss one, because at times when the company reports earnings after hours, let's say at 4:30, then typically the press conference will take place, let's say at 5:30, 6, 7 p.m. Sometimes in the morning hours, when the company reports earnings in the mornings, we may not actually get that conference call until the market opens. So if that's the case, then it looked like everything was bullish. All of a sudden, things completely turn around. You see huge volume coming in on these option side, on the put side. It's time to get out and it's time to buy some puts. And number 9, calculate the market move on the day which the stock is announcing earnings. So that goes back to the 13 markets move formula, where you really want to keep track of all your market moves each and every day to identify on which day you should be day trading and on which days you should be swing trading. So by keeping track of these sequences and identifying on which day of the sequence this particular stock is announcing earnings, it's going to give you a better understanding on whether you should be buying and just trading that stock intraday, or whether you should be opening the position and holding it for more than just a day, keeping it overnight for maybe a period of 48 or 72 hours. And in some instances, in slower moving stock, you may be wanting to hold the position till the following week instead of just buying this week's options. So very important to understand the 13 markets move formula. Guys, if you want a simple solution for that, okay, instead of keeping track of everything yourself, we have 13 Market Moves daily subscription. So all you have to do is subscribe for the monthly service. You will be able to get to the VIP section, where we will record a daily video specifically showing you what market move took place today. What is the sequence that has the highest probability of a particular market move happening tomorrow? You will have all of that information. You will have all your weekly earnings reports already sent to you automatically. So if you guys are looking for a simple solution, you're trying to save yourself a lot of time, just simply click the links below, subscribe to the 13 Market Moves daily service, and I guarantee you to save you a lot of time. You're going to be able to learn a tremendous amount of very useful information. And of course, for those of you that have not taken the charts divergences or the 13 market moves, guys, this is a crucial piece of the puzzle. You need to learn these things. You need to understand how they work. And when you combine all of that stuff together, guys, you will be able to finally trade like a rock star. Congratulations on finishing the course. I wish you great success, and I look forward to hearing your success story on our channel in the near future.